Good morning, good morning, good morning, good morning, good morning. My name is Sean Dexter and I welcome you back to the Mango Grow for your daily Bitcoin analysis video. Alrighty, Bitcoin at $67,600. I'm here to give you guys an update on our leverage trade. Essentially, I want to make sure that you guys don't do anything stupid at this juncture, right? So let's go ahead and do a quick recap. Around 2 weeks ago, we highlighted this trade opportunity in this zone over here. Let me go ahead and just increase the size here for you guys. So this zone over here coming around, I think it was $58,000 to around $60,000. We marked out the zone, and essentially our thesis was that, hey, if the month fails to close above $65,000, then we are going to have a leverage trade opportunity towards the long side, right, by bidding the zone over here. Okay, so it was as simple as that. If the bulls fail to close above 65,000, it's not a bad thing. It just gives us an opportunity to put on a long position at this very, very lucrative zone, because it's easy to know that we are wrong. Going back on over to the chart now, the live chart, right over here, we're looking at the same chart, the same zone marked out over here. And what do you know? Price did come down swiftly to the zone that we marked, held there for a bit, got a little bounce, came down again, tested again, got another bounce, tested again, and then got the big bounce back to the top of the range. Now, today's video, I want to emphasize that at this juncture, okay, if you guys are sitting pretty in your long positions, this is not the position where you want to add to your trade. If you guys are not in your trade yet, this is not the place where you put on a brand new long trade. I have the zone that I marked out for you guys, okay, in the video after this one. By the way, go ahead and watch these videos again. They're extremely educational. If you watch this one and the one after that as well, you guys will pick up some really, really useful skills that you guys can use for all your assets moving forward. At the very least, if you did not take this leverage trade over here, then you can use it as an opportunity to learn from it, right? It was a very, very simple trade. If we weren't looking to be right, we were looking to put on a good trade. Okay, why was this a good trade? Because if we lost the zone over here, it was very easy to know we are wrong while still positioning for a much, much larger move, right? Somewhere to $115,000 to $120,000 as our first target. So our risk was very, very limited compared to the upside gains that we had on the table. Now, at this juncture, the zone that I marked out for you guys, I said that, hey, we do not get excited until we break the zone. Now, again, going back to our video, you guys can see that I marked out this diagonal trend line over here, right? And we have the same diagonal trend line right over here. But you guys know my view on diagonals. I don't take them all that seriously. They're just good for me to visualize a trend, but I will rarely ever use them to make decisions. I like to use indicators that I can't move. I like to use horizontals that I can't move. They keep me objective. Diagonals are like a tertiary tool because they're very, very easy to move and adjust to fit your bias. That being said, we can use them as an add-on to get a boost of confidence, right? And over here, you guys can see that, hey, we have broken the diagonal that we drew. However, it also must be said that if you were to draw the diagonal in the more technical way, you'd be marking out these wicks over here, right? So, and the wicks I'm talking about are these guys here, this one here, this one here, and of course this one and this one, right? If you mark out those wicks and make sure that you're connecting those points, right, to the best of your ability, you're going to see that we are still right up against resistance. And interestingly, it also confluences perfectly with our zone of resistance that we marked out, right? So the timing that the diagonal crosses the zone of resistance is exactly at the right spot. Because had this taken even a couple of 4-day candles later, the diagonal would have been underneath our zone of resistance. These are the things about technical analysis that I love so much. It is so fascinating to see how all of these things come together. And you can see how your technical analysis can help you time a market move to some degree of precision. All right, so let's get back on topic over here. Right over here, we have our zone of resistance, and it's lining up with our diagonal resistance line over here as well. I say we don't get excited until we break this zone over here, right? We're sitting pretty in our positions. Okay, these are leverage positions that we're talking about. Our spot positions, should have never been touched. Our spot positions were always intact. There was no reason to ever let go of our spot positions. I talked about this for months and months and months. Here is a video from, I think, a month ago. Actually, I did a Bitcoin cycle update and I said, hey, yes, it's uncomfortable, but until we lose this bi-weekly dynamic over here, we do not have permission to let go of our spot positions. This is why the Mango way keeps us stress-free. Not because we are always trying to be right, but because we are rules-based. We set ourselves a set of rules and we follow the rules. If things don't work out, it's not our fault. It was the rules or the indicators that just failed us, right? It's easy. It's stress-free. We get to absolve responsibility to our indicators and the market. The worst thing you can do to yourselves, guys, is not follow your own rule set, your own edge. And this was our edge, right? This was our edge for this entire market cycle. And if we let go of our spot positions right over here, then what the hell is the point of having edge? There is no point having edge if you don't follow your edge. Now, what's our edge over here? Our edge over here is to respect the zone and not get greedy over here, all right? We're supposed to be buying at the bottom of the zone like we talked about. At this point over here is not the time to be getting overly excited. Fine, be excited, be happy for your positions doing well, but do not add. Do not put on a brand new position over here. Be patient. Watch. When the time comes to add to our trade or to put on a new position, for those of you who are not in a trade yet, I will do an update video and I will let you guys know that, hey, there's a new trade opportunity on our hands. So make sure to hit the subscribe and the notification icon so you don't miss that trade opportunity when it does come. Because remember, this trade over here at this zone, we had to wait a long time. We had to wait like around 12 days before we put on our leverage trade, right? Yes, we won our spot trades, but we waited patiently for that leverage trade opportunity. Price rallied all the way to $67,000 and we were still not in a leverage trade because I was not comfortable with that juncture. This zone, however, was an easy trade, and that's what we do over here at Mango. We take the easy and the stress-free trades, and it allows you to position for those big wins somewhere around $120,000. Now on that note, I do also want to talk about whether or not you should be taking profits at the zone. That all comes down to how big of a position, how thick of a position did you allocate right over here at the zone. If you over allocated and you're overweight on your position, then you can trim your position down over here at the zone and take profits. However, if you under allocated, allowing yourself more breathing room towards the downside in case price went against you, because you wanted to ensure that you capture the bigger move to around $120,000. For example, if your invalidation was somewhere all the way to the bottom of the cloud, right? Well, in that case, if your invalidation is that far away, you're going to have a smaller position size relative to your invalidation and your stop loss being really tight, right? The tighter your risk, the bigger your position size. So if you had a thick position, you can now take your profits at this zone over here, thereby giving you the same position size as someone who had a thinner position but allowed himself more breathing room. So it's a give and take. If you're allowing yourself more breathing room, you have to kind of sit through this now. You have to wait and watch what happens over here because you want to have a decent enough position size so that way when price actually makes its way to $120,000, you have that huge, massive win. On the other hand, if you have a thick position, you can now reduce your position size, take some profits, and allow yourself to still have that big move, that big win in case price moves up to $120,000, right? So you're ending up in the same position either way. There's always a give and take. You put on some extra risk over here, but now you get to take profits over here, and in case we do get another high or low, you get to add to your position and you play the same trade over and over again. That's how easy and stress-free Mango trading is, guys. Now, before we end the video, quickly for you seedlings out there, I want to go ahead and give you guys some guidance as to what content I want you guys to brush up on leading into this next phase of the market. Now, this is for those of you who have already watched the entire course and you guys have not skipped any modules, okay? These are the modules I want you to revise. Definitely rewatch Reality of the Markets, Thinking Like a Trader, okay? Both of these are going to be very important for your mindset. Now, you can scroll all the way down, and excelling in support and resistance is not going to be all that important, in my opinion, leading into 2025. What you do want to focus on is institutional order flow and market mechanics, and this is where your big wins are going to come in. Advanced trend trading analysis, your risk management, and you scroll all the way down to your Ichimoku module, all right? That's it. That's all you guys need to brush up on. I know it's a lot. I'm saying that's it. That's all you guys need to brush up on, but do it. Do it for yourselves, guys. Invest the time in yourselves. If you don't invest in yourselves, the markets are not going to give it to you for free. That's all I'm asking you guys to do. Just invest some time, revise everything. You can watch at 1.5x speed, 2x speed if you want to, but it's gonna pay off, guys. Look at this trade over here, guys. Right now, we don't know if it's going to break out like this arrow is drawn, but we are sitting in a good position now, because even if it does come back down, we can take our profits and look to reposition. Now, if you guys are new to the C program, do not skip any module. Go through every single thing. Oh, and if you guys are interested in the Mango C program, there is a birthday coupon still running, B-Day 2024. It's applicable on all Mango products, of course, but I highly recommend the Mango C program. You get access not only to the course content, but to a amazing community. We have magical vibes in the community. With that, just a quick recap. We're sitting up against resistance. I know a lot of people are going to get excited here. You may do something stupid, but in my opinion, simply wait for the zone to break before we make any new decision, because a lot may happen. There's going to be a lot of volatility over here. A decision will be made, but for now, I say sit on your hand. Now is not the time to be putting on any new positions. If you guys have any questions, I'll be happy to answer them in tomorrow's video. So just ask me in the comments down below. And if you guys are enjoying these videos, let me know by hitting that like and hitting that subscribe button, because it goes a long way to see your support. I'll see you guys in the next one. Ciao.